Imagine running a lemonade stand. You set up right in the middle of your neighborhood. You sell more lemonade than anyone. You take in piles of cash. Then the neighborhood says, "Hey, where's your share for the streetlights, the sidewalks, the school?" And you go, "Oh, I don't technically sell lemonade here. I sell it through my cousin's address across town." That's basically what Europe is yelling about right now. Because the year is 2025. And European capitals are not panicking about tanks or a currency collapse. They're panicking about something way more personal. Money that should be funding hospitals, roads, and public services might have slipped through the cracks, and the name at the center of the storm is one of the biggest on Earth. Amazon, not a random company, not a tiny startup. A giant that touches everyday life, the Today shipping machine. But here's the line that made people sit up straight. Italy believes up to 1.2 billion euros in VAT may not have been paid between 2019 and 2021. That's not pocket change, that's the kind of number that makes governments go, "Okay, enough." So the question is simple. How does a company with tens of billions in sales end up paying so little tax on its European business? And why does it matter to you, even if you've never set foot in Italy? Let's walk through it like a story, because it is a story. And it's bigger than one courtroom. To get this, you have to picture Europe after the pandemic. People are still trying to breathe again. Budgets are still tight, and prices have been acting crazy. Groceries cost more, gas cost more, rent cost more. So central banks in Europe, like the European Central Bank, raised interest rates to cool things down. And when interest rates go up, governments feel it too. It gets more expensive for countries to borrow money. The credit card payment gets heavier. Now, add one more piece. Many European countries already carry huge debt. Italy is the perfect example. They have expensive public programs, aging populations, and high borrowing needs. So if a government is under pressure, they start looking under every couch cushion for revenue. And that's where Amazon becomes a lightning rod. Amazon sells across Europe, but a big chunk of its sales flow through a Luxembourg-based unit called Amazon EU SAL. Luxembourg has a long history of being business-friendly in the tax world. Not illegal, not automatically shady. But to regular people, it looks like this. I bought it in Italy, it shipped to my Italian address. But the profit is booked somewhere else, and when governments are stressed, that kind of structure stops looking clever, it starts looking like a problem. So here's where this case gets spicy. Italy isn't only staring at corporate income tax. They're going after something simpler and more emotional, VAT. VAT is like a consumption tax. It's the kind of tax that's supposed to be collected when you buy stuff. Like sales tax in the US, but built into the price in many places. Now think about Amazon's marketplace. Not everything on Amazon is sold by Amazon. A lot of it is sold by third-party sellers. And many of those sellers are outside the European Union. Investigators say that in Italy, a huge share of goods sold on the platform may have come from non-EU sellers, sometimes estimated around 70 to 80%. That's where the alleged gap happens. The prosecutor's argument is basically, Amazon isn't just a billboard, Amazon controls the platform. Amazon controls payments, Amazon controls logistics. Amazon can see the transactions. So if sellers weren't properly handling VAT, Italy claims Amazon should have ensured it was collected and sent in. And when Italy estimates the shortfall could reach 1.2 billion euros across 2019 to 2021, it stops being a paperwork dispute. It becomes political. It becomes a headline. It becomes a fight about fairness, and once one country gets loud, others start watching closely. Wait, 1.2 billion? Here's the moment the public tunes in. Not when lawyers talk, not when economists argue. It's when people hear the number and do the mental math. 1.2 billion euros. That's schools, that's healthcare. That's rebuilding roads, that's paying down debt so interest doesn't eat the whole budget. And the timing makes it worse, because Europe has been squeezed. Inflation has been stubborn, interest rates have been high. Governments have been under stress. So when you're a regular person paying higher bills, you hear 1.2 billion and think, so I'm paying more for groceries. But a mega platform might be missing taxes. That's how anger forms. This is not just about Amazon anymore. It becomes about trust. It becomes the kind of story that turns dinner table talk into political pressure. And in that kind of environment, prosecutors don't want to look soft. Governments don't want to look weak. They want to look like they're defending the system. Because when people stop believing the system is fair, that's when things get unstable, not tomorrow, but eventually. The Luxembourg switch, then comes the deeper punch. Europe has been side-eyeing Luxembourg structures for years. The idea is simple: if profits get booked where taxes are lighter, countries where sales happen feel robbed. It's like a restaurant in New York that somehow reports its profits in a tiny office in another state. Again, it can be legal, it can be structured under international rules. But the ethical question hits hard. Where is value really created? Is it created where the customer lives? Where the warehouses sit? Where workers pack boxes? Where delivery vans drive all day? Or is it created where the paperwork says the main company is? And that's the uncomfortable thing about the digital economy. It doesn't fit the old tax logic. Old logic was built for factories, for physical stores, for a clear home base. But Amazon is software, data, and logistics spread across borders. So Europe feels like the rules were written for the old world, and the new world learned how to glide around them. When stress is low, governments tolerate that. When stress is high, it feels like a leak in the boat. This is where the story stops being a tax case and becomes a warning sign. High inflation means people are already mad. High interest rates mean governments are paying more just to stay afloat, so enforcement gets aggressive. Because when a government's budget is tight, every missing dollar has a face. A delayed hospital upgrade, a school with fewer resources, a train line that never gets fixed, and history shows what happens when fiscal stress builds and trust disappears. In the late 1990s, parts of Asia looked stable until cracks suddenly became an IMF crisis. In Greece, years of fiscal weakness turned into a debt blow-up. Argentina has lived through repeated spirals where confidence vanishes fast. Turkey and Venezuela show what happens when trust breaks and money systems become chaotic. Europe is not those countries today, but the lesson is the same. When money gets tight, everyone starts enforcing rules they used to ignore. So Italy's case isn't just about Amazon. It's a symptom of the era we're entering. Less patience, less tolerance, more pay up. Now let's talk fallout, because even if you don't care about VAT, this still hits real life. First, governments. If a country thinks billions are slipping away, it tightens the net. More audits, more regulations, more reporting rules. Second, businesses. Local retailers already pay local taxes. They can't route sales through clever structures. They can't play cross-border chess. So when platforms get an edge, small stores feel crushed. You've seen this in the US too. When big online shopping grows, malls shrink. Downtown retail struggles, commercial property changes. That affects jobs, not just jobs at stores, but jobs tied to those stores too. Third, investors. When a major company faces legal risk, it creates uncertainty. Fines, back payments, new rules. Even if the company survives easily, markets hate surprise costs. And there's reputational risk too. Because regulators can move faster than people think. One year you're optimizing. The next year you're on the front page, accused of dodging. Finally, consumers. If enforcement changes costs, platforms might pass some of it along. Not always, but sometimes. So yes, this starts in Italy. But the ripple touches everyone. And that brings us to the uncomfortable ending. Because this case might not be about whether Amazon is good or bad. It might be about something bigger. The world built tax systems for an older economy. A world where companies had one obvious home. Where value lived in factories and offices. But now value lives in algorithms. In platforms. In data. In invisible infrastructure. So governments are asking a new question. If your business touches our people every day, shouldn't your taxes reflect that? And companies are asking a different question: if we follow the rules as written, why are we being punished when politics changes? This isn't the end of the story, it's a turning point. A moment where the digital economy and the old tax world collide. And both sides realize the rules are about to be rewritten. If you've read this far, I'm curious. Do you think platforms like Amazon should be responsible for VAT compliance from third-party sellers? Or do you think that's putting too much burden on the marketplace? Drop your take in the comments, I'll read them. And if you like this kind of real-world money story explained like a human conversation, hit like, subscribe, and follow the channel. Because the next few years are going to bring a lot more of these collisions. And we're going to break them down together.